All right, continuing on in our discussion of fraud as it relates to the audit of the financial statement audit, we're going to be taking a look here at AUC section 240.15, and it relates to a discussion that we're supposed to have among the engagement team whenever we're going through our planning process for the audit. And so in AUC section 315, there's a requirement that we have an engagement team meeting that includes the engagement partner, and it discusses matters that the team members need to know about the audit. And so this AUC section 240.15 is piggybacking on that requirement of 315 and saying, hey, when we have this engagement team discussion that you're requiring in 315, why don't you discuss the entity's susceptibility to material misstatement due to fraud also? And so it should be a brainstorming session with an exchange of ideas about the entity's susceptibility of material misstatement due to fraud. And that might involve how management could perpetrate and conceal fraudulent financial reporting, or how assets of the entity could be misappropriated. And as we saw in the prior video about professional skepticism, we need to set aside our beliefs that management acts with integrity whenever we're holding these discussions. And so fortunately for us, we have a list here that this AUC section provides us of what we should discuss in particular. And the first one here is the fraud triangle. We need to discuss the incentives that management or others have for perpetrating fraud, the opportunity that they have for perpetrating fraud, and the rationalization that they might rationalize committing fraud. And we discussed this fraud triangle in another video, so you can go back to that one. Another requirement that this section asks us to discuss in this engagement team meeting is the risk of management override of controls. We also might discuss circumstances that might be indicative of earnings management or manipulation of other financial measures, and those might lead to fraudulent financial reporting. We also need to stress the importance of maintaining professional skepticism throughout the audit, and we also need to discuss how the auditor might respond to the susceptibility of the entity's financial statements to material misstatement due to fraud. And so typically, whenever we're going into these engagement team meetings, we'll have sort of a checklist that makes sure that we touch on each of these points in our discussion, and we write up what we discussed in part to each of these. And also, finally, this section stresses that we continue these discussions throughout the audit engagement as we learn new facts. So we don't need to just limit this discussion to the engagement team meeting that we're having. We need to discuss further any of these items if new information comes up throughout the audit. And so we've got some explanatory material here. Looks like A12 through 13. And so let's go down to that section and see the details about this that we need to consider when we're holding this engagement team meeting. Okay, so now we're down in the explanatory material where we have sections A12 and A13. And it looks like here they provide us a good list of things to discuss in the engagement team meeting. But first it tells us why it's important for us to do so. It says that discussing the susceptibility of the entity's financial statements to material misstatement due to fraud with the engagement team gives a few benefits here to the audit. First, it gives an opportunity for the more experienced members of the engagement team to give their insights about where the financial statements might be susceptible to material misstatement due to fraud. So in the hustle bustle of performing the accounting work in the firm, they may not have an opportunity to speak up in the day-to-day business. But if you set aside a particular meeting to discuss these things, the more experienced engagement team members will have an opportunity to speak up and provide useful information to others of the engagement team. It also gives sort of a brainstorming session where people can bounce ideas off of each other and maybe come to a better response to the risk than if one person had decided on their own. And this also gives the ability for the work to be divvied up between the engagement team members and to set different goals and timelines and such. So it's very, very much an administrative meeting as well for the efficiency and effectiveness of the audit as it relates to material misstatements related to fraud. And it also gives an opportunity for us to determine how the results of our audit procedures will be shared with the engagement team, and also how to deal with any allegations of fraud that are brought to our attention. So to get the fullest benefit out of this here, this section has a couple of options of things that we could discuss to make sure that we are covering all of our bases as it relates to the risk of material misstatement due to fraud. And some of the things we might discuss include a consideration of management's involvement in overseeing the employees with access to cash or other assets susceptible to misappropriation. So maybe how closely is management watching these employees who have cash? Are there appropriate procedures that might prevent the cash from being misappropriated? Maybe the engagement team members have noticed a big change in lifestyle of management or employees. Maybe they're pulling up to the office in a Bentley now rather than their Camry. So not say Camry's a bad car, but now it seems like they have a lot more money. So where are they getting that money from? We might also brainstorm about triggers or situations and circumstances that might trigger in our mind that, hey, this might be a fraudulent act. For example, if we maybe notice a whole lot of revenue in December year-end month, but hardly any revenue in January, are they pulling revenue from January into December to gross up the earnings? in the year under audit. So that's just an example, but these are things we could discuss in the meeting for all engagement team members to be aware of. Also, we're required to incorporate unpredictability into our audit. That's discussed in other areas of the AUC sections, but here in our engagement team meeting, we might discuss what types of procedures we could do to make them unpredictable. So we could discuss the nature, time, and extent of those additional procedures during our engagement team meeting. We might discuss procedures that we can do to respond to the risk that the entity's financial statements might be materially misstated due to fraud. And so we might discuss potentially the journal entry testing or something, or how we might select journal entries. What would those journal entries look like for them to be suspicious, and to select them and see if they have a valid business purpose. And finally, we might consider allegations of fraud that have come to our attention. So maybe we heard something in the news, or an employee or whistleblower has told us that or alleged that some type of fraud is going on at the entity. So we might could discuss those allegations and how we might respond to them. So we have a lot of things that we could discuss related to the entity's susceptibility to material misstatement due to fraud. And like I said earlier, we have a checklist of all these different things to discuss, and hopefully, as the entire engagement team is together, we put all of our heads together and come up with some good options to make sure we bring our audit risk to an acceptable level